Welcome back to the YouTube channel of J Finance, Berkshire-based mortgage insurance and equity release advisors. Following on from a recent video I've done on self-employed income, I thought I'd look at employed income today and talk you through the different types of contracts that lenders will look at and the different types of income and how they're treated. So let's get cracking and let's look at permanent employed income, because that is what the majority of people in the UK are going to be on. But when it comes to that income, what if you've only recently started a job, or maybe not even started your job, or perhaps got a pay rise coming up? Well, the great news is that there are some lenders that will take future income. You don't need to have a month or 3 months worth of pay slips with every lender. So fantastic news if you've got a new job starting soon, subject to things like probation, or if you've got a pay rise coming up that you know has been confirmed but hasn't started yet. We've got some great options for people who've got income increases coming or new jobs. Let's look at the different types of contract that can exist though, such as fixed term contracts. Again, some great news if you're a fixed term contractor. You don't necessarily need to have a huge history behind you or a huge contract with years left to run on it. It varies from lender to lender. So yes, absolutely, some lenders will need you to have 2 years history and maybe 6 to 12 months remaining on your contract, but that might not be the case. What if you've got your first ever contract starting in an industry you might have been employed in before, but you've got your first ever contract, let's say it's 12 months, because funnily enough that's the criteria, then the great news is we've got lenders that can look at first contract when it hasn't even started. Within that, there are options if you've got a history, and of course there's options if you haven't got very long left on your contract, but you've maybe had a good history behind you, because you're potentially employable. And some lenders will look at that rather than just a computer says no attitude of you've only got 2 months left, can't lend to you. I want to look now at income that is outside of basic income. So what most lenders will take as an absolute given is things like car allowance if it's contractual, London waiting, hazardous allowances. We're quite close to one of the UK's nuclear bases and therefore got a lot of workers there who get a high hazard allowance, which is quite interesting to look at, makes me wonder what they're up to, and of course they can't say, and most lenders will take that without too much trouble. If we look at other income though, things like bonus, commission and overtime typically, that can be slightly trickier for lenders to look at. Now not for us because we're quite well experienced at who takes what. So there are different stances, shall we say, that lenders take. If we look at bonuses, if you look at an annual bonus, most lenders need 2 years history and then they'll average. But, surprise, surprise, there are lenders that will take the latest in isolation, or if you've only had 1 year because you've only been there a year, that 1 year in isolation as well. Same goes for things like commission and overtime. There's a big difference between lenders that might take the last 3 months' pay slips, average and annualise, and others that might look at a P60, which can be great if your overtime might be quite seasonal, for example, getting busier in the summer months, perhaps in tourist locations, or Christmas, perhaps. We've got lenders that take a different approach to that, and it's always worth asking the question, not just presenting your last 3 months' pay slips to your bank and hoping that that's going to result in the best maximum lend for you or the best rate for you. So just to recap what we discussed there, permanent income with pay rises acceptable, with new jobs acceptable. Contracting is acceptable depending on history or length remaining, and there can be some great variances on that. Additional income, bonus, commission, overtime might not necessarily be averages, might not necessarily be the last 3 months. Ultimately, with the number of lenders that we as a whole of market firm can access, there is not necessarily a lender for everyone, but a high chance we can find something for you if you've struggled to obtain a mortgage so far. So for more information and more advice, if you are looking to remortgage or purchase, please come to J Finance for a no obligation conversation today.